There's still a gap there, but almost filled it. Came pretty close. Trump tweet broke it out of the 20 strike. What did he say? Perhaps Iran can now proceed to peace and harmony. I will encourage Israel to also pursue peace. All right. So this puts us a little bit above the market maker's expected move for today. But I guess the market assumption is that this is now going to translate into peace. Israel, who's not been commenting very frequently today, has made it fairly clear that they have no intention of ceasing their operations against Iran for the time being. So, if they were to turn this around now, that would be very interesting. ES did break back up into the trend, tested 60.78 at the high, but is selling off a little bit in after hours. It can still reject on the retest of the trend here. Obviously, a failure back below 60.56 would help confirm that rejection. But for now, it seems fine. We have Powell testimony tomorrow, I think, with the House Financial Services Committee. 10, 20, and 30-year yields moving up into the end of the day. However, dollar not really stopping its decline. I'm down 40 points on the day. The biggest hit was in the belly of the curve at the 2 and the 5-year. And most of that coming alongside Waller's statements that the Fed could be ready to cut as early as July, or early as the next meeting, I think is what he said. Correlation coming down into the back half of the day, but still ending the day a little bit higher than where the day started. Same could be said mostly for 3-month correlation, although I think 3-month correlation actually ended the day a little bit lower. So confidence inducing. Big sell off in commodities, mostly just oil. Oil down 8.38% with long before any announcement of peace. But I'm guessing that the market is under the assumption that U.S. strike and then Iran strike back and then the whole thing's over. However, if it's not, there will be repricing there. Forward yield on volatility ending the day -4%. We saw a big move in volatility down into the end of the day after our bounce at 59.50. The bond curve still moving up. Leverage on the carry trade bouncing a little bit into the end of the day there, but overall down quite a lot from 860 down to 840. Not huge moves there. Bond volatility is probably going to remain low. Skew. There was a little bit of out of the money put demand going into today. I think we saw some of that realized from Thursday and Friday. Not sure that's going to turn around, but I'm sure there'll be less out of the money put demand after the news today. No pickup really in breadth, despite the move back to the upside. I think stocks are still lower than they were at the start of last week, and that seems to be across most time frames. Correlation between VX, and cash VIX picked up a little bit today, rising from Friday's low at 87.93 up to 89.32. If we continue to see a rise in correlation, and this is kind of interesting actually, we might start to see some more upside and volatility going forward. Fed fund futures moved real hard on Waller's announcement that he wanted to cut rates early with the June 2026 moving up to almost 0.9, Jan 2026 moving up above 2 cuts to 0.56, and the September contract moving back up to 0.135 points. At the end of the day, the bear steepener kind of won out a bit with this ticking up after bottoming out today on increased bond demand. We do see the bear steepener picking up into the end of the day. So everybody who dove into bonds earlier today on the Middle East risk, selling them off now, basically. Out here, we tested 59.47 finally. Bounced, got a pretty clean bounce off of it, back to resistance. up near 60.31, which we have yet to clear. But clearing the 60.31 resistance, especially off the back of a bounce, would be pretty significant and could open up a retest out at our local, or well, out at the Feb highs around 61.47. There is resistance at 60.99 to the upside also, but those are the next two levels of importance after 60.31. If this does get rejected here, and then the failure continues, I would imagine it will be at least a few days before we come anywhere near 59.47 after today's upside move. So it'll have to be Powell or GDP that that hurts enough. Otherwise, we're probably going to stay fairly stable in the 6,000 to 60.50 range. And I think that's about it for today. TQQQ got a nice bounce. How did RSP? RSP did pretty well. So breadth wasn't too bad. Dow underperforming a tiny bit, but not much. So it seems pretty broad-based. Producer manufacturing kind of killing it. Although I will say that the bigger components of electronic tech didn't do too well. Obviously, energy did very poorly, but the gains on Tesla, due to the presumption of oil prices going up, could erode. So Tesla ran super hard today, skyrocketed. This might be a worthwhile short, especially if it falls back below the 340 level. Given that all of this long positioning largely due to the massive spike in oil earlier today, and with oil selling back off, if there's no further conflict, then Tesla is likely to sell back off as well. They don't give a shit. Nobody gives a shit about taxi testing. This is because they assume gas prices were going to spike, and they wanted to look, it gapped up this morning, but definitely room to move down if it fails support. So I don't know, I'd keep an eye on it. Anyway, that's about it. Thank you guys so much. I will see you bright and early tomorrow. Have a good night. Later.